I think this week highlights the virtues of Bitcoin as much as it exposes the fragility of the crypto ecosystem. Bitcoin's a commodity you can self-custody without an issuer. The vast majority of all the crypto tokens out there are unregistered securities trading on unregulated exchanges, and they're fairly centralized. And so what could go wrong? Well, we saw what could go wrong if a centralized token trading on an unregistered exchange blows up this week. I think that the Bitcoiners have been predicting this for a long time. Speaking for all the Bitcoiners, we feel like we're trapped in a dysfunctional relationship with crypto, and we want out. Look, I think the industry needs to grow up, and the regulators are coming into this space. And what the world wants is it wants digital assets and digital commodities and digital securities, but there's no way to register a digital security. There's no clear guideline or roadmap for designating a digital commodity. The world wants $1 trillion of digital currency in the form of the USD stablecoin. And so I think that the regulatory intervention of late has been all negative, like enforcement. But the marketplace is waiting for the regulators to say, this is how you register a digital currency. This is how you register a digital security or a digital commodity. And instead of saying all the crypto exchanges should register, we need to get the crypto exchanges registered because the future of the industry is registered digital assets trading on regulated exchanges where everyone has the investor protections they need, and the investors in general understand the difference between Bitcoin and a stable coin and a security token. Well, I think it's definitely going to strengthen the hand of the regulators. It's going to accelerate their intervention, and there's a regressive regulation, which is to say you can't really do anything, and that'll contract the industry. Bitcoin will be the winner because Bitcoin is a digital commodity and it's the least controversial of everything. But there's a progressive regulation which says this is a path to register a digital security, a digital currency, a digital token, and your digital exchange. If there is a progressive regulation, then I think you won't see 20,000 tokens, you'll see a handful, dozens, but they'll be properly registered tokens. The industry is going to grow much more rapidly. And ultimately, we're moving from the entrepreneurial stage where this was a Wild West offshore where anything goes, to an institutional digital asset stage where the big players like Bank of America and Fidelity and BlackRock and the Goldman Sachs and JP Morgans are going to enter this space, and we're all just going to grow up and the world is going to benefit from that. The reason we're excited about Bitcoin is it's something greater than all of us. We're not betting on a company. We're not betting on a team of individuals, the efforts of others. We're actually buying into a protocol which is spreading all across the earth to solve a problem. MicroStrategy is on a roller coaster, has been since August of 2020. In August of 2020, we had to make a choice or else face the inevitable descent into economic misery. So what's the result of that choice? We put $425 million of our cash into Bitcoin at that time, and we've been buying Bitcoin ever since. Here's the result for our shareholders. Our stock is up 38% as of close of market yesterday in the doldrums of the crypto crash. Bitcoin's up 33%. The S&P was 12%. NASDAQ lost 6%. Gold's down 16%. Bonds are down 21%. MicroStrategy's performance beats every big tech company. We beat Apple, Google, Microsoft, Amazon, and Netflix. And so, it's a roller coaster, but our shareholders are winning. And we're going to stick with that strategy because it's working for us, and our conviction is steadfast. Look, I've said over and over again, there is no second best crypto asset. The Bitcoin strategy and the Bitcoin idea is you can self-custody an asset without an issuer. And it was born out of Satoshi's observation that you can't trust a currency that can be manipulated by a central party, and you can't trust a bank. And eventually the bank will freeze your assets and the currency will be inflated and eventually it'll crash. That's been happening for thousands of years. The crypto industry just reinvented fiat currency. FTT is just another currency with a centralized exchange, with undue leverage, with opacity. And it's a sad, sad situation. But it's a reminder of why Satoshi gave us Bitcoin in the first place. I think it's pretty clear the only investable asset for a responsible investor is Bitcoin. And the use case is I'm holding it as a store of value for a long period of time, knowing there's going to be volatility. And, I personally, I'm not going to come on your show and recommend a registered security because registered securities like Google and Netflix have risk. Unregistered securities trading in unregulated exchanges on massive leverage offshore, right? What could go wrong? The principle of Bitcoin is you can't trust the CEO, you can't trust a company, you can't trust a custodian, you can't trust the bank, and you shouldn't have to. You should be able to hold your own keys, run your own node, and the network ought to work with no discretion for the next 1,000 years. Satoshi articulated this very clearly in the white paper. I think that it's a strong tenet of the Bitcoin community. It's a sad circumstance that a lot of people have to lose a lot of money to be reminded of these basic principles. But I think this is a teachable moment for the entire crypto industry and the mainstream industry. And it teaches you that if you're going to have a crypto asset, it needs to be nobody else's liability. You need to have full transparency to it. And that's what Bitcoin is. And that's what FTT was not.
It's really as old as finance and as antiquity. When you mix together a bunch of customer money, non-disclosure, and leverage, borrowing against it, and inside these companies trading, investors get hurt. And I think just looking at what we see in the press, if I can stay with that, just Andrew, this story has been going on for many months. You remember the collapse of Terra Luna and a bunch of crypto lending platforms. Well, it looks like in the last few days, this is all interconnected. This is a very interconnected world in crypto with a few concentrated players at the middle. And one of those concentrated players had the toxic combinations of lack of disclosure, customer money, a lot of leverage, meaning borrowing, and then trying to invest with that. And then when markets turned on them, it appears that a lot of customers lost money. And that's where our mission is about those customers. I think that investors need better protection in this space. But I would say this is a field that's significantly non-compliant, but it's got regulation, and those regulations are often very clear. And we have multiple paths. And one path is working with those crypto exchanges, crypto lending platforms, and to get them properly registered. And why that matters is that's so the public's protected. But we have another path, which is enforcement. We've brought, between my predecessor and the teams now at the SEC, at least 100 actions in this case. And we've been very clear in these various enforcement actions. And we had a big win even this week on a crypto token called Library, where a court clearly said, you've been on fair notice. And yes, this is a securities under the securities law.
If you're new to the